Hello everyone, how are you all doing out there? I'm Kate Hill, bringing you the best and unbiased content on property, along with fantastic hints and tips. Today, let's take a look at what property investors need to know for 2025. Australia's 2025 property market continues to be a hot topic of discussion. The allure of positive cash flow properties, given our high interest rates, emerging best suburbs for property investment in 25, and shifting real estate market trends for 2025 all paint an exciting picture. But as every experienced investor knows, opportunities come hand in hand with risks. For those wondering how to start investing in property or fine-tune their portfolios, understanding potential market risk in 2025 is just essential to making those informed decisions. So I want to delve a little bit into those key market risks property investors should watch out for in 2025, including policy changes, oversupply, economic downturns, and all that kind of stuff. And then finally, we'll outline strategies to mitigate these risks and position your investments for success. The Australian property market is set to experience steady growth in 2025, but several challenges loom on the horizon. A complex combination of global economic conditions, government policies, and local housing dynamics could impact investors across the spectrum. One of the biggest uncertainties for 25 is potential shifts in state government housing policies. For instance, rental reforms. Many states have been and are introducing more stringent tenancy laws, such as caps on rent increases, new taxes, or additional rights for tenants. Now, while these policies aim to make housing more affordable, they can reduce rental yields and flexibility for landlords. They also actually make rental housing less affordable because fewer investors purchase property, and this leads to an undersupply, which drives up rents. Anyway, taxation adjustments. Changes to negative gearing rules or capital gains tax discounts always seem to remain a possibility and part of the political debate, especially as governments look to address housing affordability and revenue needs. Mitigating tip: stay informed about policy developments and consult tax or legal advisors and to align your investment strategy with any new regulations. Diversifying your property portfolio across different states can also mitigate the risks of state-specific reforms. Emerging markets with large-scale developments, often considered best suburbs for property investment in 2025 by the developers themselves, might face oversupply risks. An influx of new properties can saturate rental markets, leading to lower yields and increased competition among landlords. The risk is particularly prevalent in regions undergoing rapid urbanisation or where developers are rushing to meet housing demand. Your mitigation tip here is when you're researching those suburbs, focus on areas with a balance between demand and supply. Look for suburbs backed by strong infrastructure plans, employment hubs, and consistent population growth. Avoid markets where speculative development outpaces local demand. The broader economic landscape will continue to shape the property markets in 2025. There is a recession risk, always. The global economy remains fragile with ongoing geopolitical tensions, the Trump factor, the chaos surrounding all of that, the slowing growth in key trading partners like China. These factors can trigger economic downturns, impacting employment and property demand. Interest rate hikes. While Australia saw rate hikes 2023-24, further increases could make borrowing more expensive and reduce affordability for both owner-occupiers and investors. While most agree that further rate hikes are unlikely, they do remain a possibility. Your mitigation tip here is conduct detailed cash flow analysis to ensure your portfolio remains resilient against interest rate fluctuations. Stay diversified. Avoid over-concentration in a single market. Diversify across states, property types, or even commercial and residential properties to spread risk. Focus on the fundamentals. Target suburbs with strong rental demand, access to transport, and employment opportunities. The best suburbs for property investment in 2025 will have robust growth drivers that weather economic uncertainties. Remain unemotional, make data-driven decisions rather than following trends or emotional biases. And build cash flow buffers. Ensure your portfolio includes properties with reliable rental income. Surplus cash flow will provide a cushion during periods of financial stress. Monitor, of course, watch those market trends. Stay updated on real estate market trends for 25 to adjust your strategy as market dynamics evolve. Investing in property in 2025 presents significant opportunities, but it also requires vigilant approach to risk management. Policy changes, oversupply in certain markets, global economic challenges are just some of those factors that can influence a portfolio's performance. If you focus on the fundamentals, research growth areas, and stay informed about those real estate trends for 25, you can mitigate risks, you can make confident decisions. Whether you're exploring how to start investing in property or you're refining your existing strategy, remember resilience and adaptability are key. I've said this before. 2025 might bring uncertainties, but with the right approach, it can also be a year of growth and opportunity for property investors. I will keep you posted on all things property from around Australia. Hit like and subscribe if you're enjoying the free content, and I will see you soon. Bye.